during the same time frame as silver, it rebounded up to around 30.60, which is about a 2.8% rebound. Of course, is not as much as silver because gold has held up really well. It's still up about 15% year to date, while silver now is probably up slightly, but it lost 16% last week, as I told you. But what this goes to show you is that when gold and silver take off again, silver is going to be, I think, on steroids. It's going to go ballistic. Am I selling some of my gold to get silver? No, I never sell either one of them unless, of course, there's an emergency. I just keep adding on to both.
Silver has recently shown notable strength in intraday trading, supported by the key technical level at $28.75. This area provided solid support, helping to stabilize the price after a sharp decline. Positive signals from the relative strength index, which had reached oversold conditions, suggested that silver was attempting to recover some of its earlier losses. This rebound follows a period of technical weakness, where silver broke below a significant upward trend line and formed a bearish ascending wedge pattern, indicating short-term downward pressure. Market commentator Mario Innecco noted that silver staged a sharp rebound, rising to around $30.60. While gold also moved higher, its rebound was less aggressive due to its stronger performance overall throughout recent months. Since the 2022 bottom, silver has been trending higher within a large parallel channel. However, the current correction phase brought a surge in volatility, pushing the price down to a 30-week low. If silver begins to rally from the recent low, it is likely to re-encounter resistance, as there has only been one significant downswing so far. Given the broad price fluctuations in recent days, the range for a potential upward move remains broad. Key support was observed today near the 78.6% Fibonacci retracement level at $28.21, which is close enough to the recent low to suggest that a short-term bottom may be in place. Innecco highlights the importance of owning physical gold and silver, whether personally or in a secure vault. He argues that these metals have consistently preserved wealth through financial crises. Amid ongoing market instability and increased volatility, gold and silver serve as tangible assets with no counterparty risk. Despite silver's fluctuations, its value as a store of wealth remains stable, a characteristic it shares with gold. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Having physical gold and silver outside the system in your possession or at a reputable private non-banking vault is a very good way of protecting your wealth. I mean, just look at people who find treasures, gold that's been gold and silver that have been buried for thousands of years or hundreds of years, or gold and silver that have sunk with ships. It's still there. It's still pristine. It's still valuable. It keeps its value. And that's what's happening right now. And I think people are waking up. So what's the slingshot been? Well, last night, 11 o'clock London, which is 6 p.m. Eastern time in the US, I looked at the markets, and the stock markets were down massively. I think, let's see here. The Dow was down almost another 2,000 points. The NASDAQ 100 was down, 300. It was down about 1,000 points. And the S&P was down about almost 300 points. And I saw that silver was in the 28 handle. And gold was still above 3,000, and then I woke up in the night and I saw that gold and silver had hit a low, respectively, at 29.70 in gold. So there were people asking last night, will gold break 3,000? Well, it did overnight. Silver went to 28.30. And then I woke up this morning and I see that silver is trading above 30. And I thought, wow, that's a slingshot. And I think it was Michael Oliver who used that term. He expects silver to do a slingshot. I'm not sure he expected it to do so soon, but it has. It shows how strong gold and silver are actually. And I'm not saying we've seen a bottom, but it could be very likely. So why are they doing that? Maybe they can smell trouble, and they can smell that the central banks are getting maybe a little desperate. We're seeing that the banking sector, the indices that measures the value of bank stocks, is actually underperforming the general stock market. And the Federal Reserve and central banks, they were created to be lenders of last resorts for the banks. And that's one thing they'll cut rates or print money for. It's the banks. Maybe that's what gold and silver are telling us. And we could even see an emergency action from the Fed. Why emergency? Well, because their next meeting is only towards the middle of May. And if things get really worse here and it threatens the big banks, they could step in. And gold and silver would go ballistic if they step in. And even if they don't, and if the crisis kind of stabilizes, things are not over. I think a lot of financial institutions are in trouble. And why are they in trouble? Why does it always happen? Well, people never learn. People always leverage. They did it in the 20s. They did it during the dot-com bubble. They did it in 08, 09. They did it during the late, let's say, teens, just before the COVID crisis. It's all about the derivatives. Some people argue that there's over $1 quadrillion in derivatives, which are basically side bets. But the other reason derivatives get bigger and bigger is because in the fiat currency system, the debt gets so big that derivatives are used to kind of mask how bad things are.
The gold-silver ratio is near a 2-year high, currently above 92, meaning it takes 92 ounces of silver to equal 1 ounce of gold. This is much higher than the historical average of around 60, indicating silver's underperformance. Although gold and silver often trend similarly, analysts note a lack of long-term co-integration, suggesting that investors shouldn't expect a return to historical norms through mean reversion. The relationship between the two metals has become increasingly unstable in recent years. The breakdown in correlation began in 2020 during the global COVID-19 pandemic and worsened further following Russia's invasion of Ukraine in 2022 and the resulting economic sanctions. Recent events have created new market dynamics, influencing investor behavior, supply chains, and geopolitical risks, which have led to a divergence in price movements between gold and silver. Despite this, silver remains a popular and appealing option. As Mario Innecco notes, when gold and silver rise again, silver may see explosive gains, often outperforming gold due to its higher volatility. He refers to it as gold on steroids, emphasizing silver's ability to magnify gains during rallies. This makes silver attractive for investors seeking momentum in precious metals, especially in uncertain economic times when both metals typically perform well. Let's get back to the interview.
As silver, it rebounded up to around 30.60, which is about a 2.8% rebound. Of course, is not as much as silver because gold has held up really well. It's still up about 15% year to date, while silver now is probably up slightly, but it lost 16% last week, as I told you. But what this goes to show you is that when gold and silver take off again, silver is going to be, I think, on steroids. It's going to go ballistic. Am I selling some of my gold to get silver? No. I never sell either one of them unless, of course, there's an emergency. I just keep adding on to both. But you might have another strategy. I'm just telling you what I do, and I'm not telling you what to do. You need to think for yourself. I think aside from the banks being in trouble, keep an eye on private equity and who lends the capital or the money to private equities. Well, it's the big Wall Street banks, big City of London banks. It could be a disaster. And it's another reason to have some gold and silver. And this friend of mine who was able with his brother to get out of private equity, their private equity positions, guess what they've been buying a lot in the last year or more? Well, a lot of physical gold and silver. They were bond guys, and I've kind of turned them around to seeing the importance of having no counterparty risk. And I think they sleep a lot more safely at night. That's the other thing that gold and silver do for you. They give you peace of mind. Yeah, so let's quickly look at where we are now in terms of the market. Well, it's 8:25 a.m. London time. We've got spot gold at 3,025. So it's moving around like a yo-yo. The volatility is through the roof. So as I said, the low is 29.70, the high is 30.60. Silver is trading at 29.90, so it's back below 30, but I wouldn't be too concerned because the low was 28.30. The high has been around 30.60. I mean, I have a high here of 30.80, but on the chart it says 30.60. The Dow futures is down 1,500 points, so another 4%. The NASDAQ 100 futures down 933 or 5.3%, and the S&P is down 4.7%. The FTSE in the UK is back below 8,000 at 7,600, down 5.3%. The Euro Stoxx 50 is down almost 6%. What about the currencies? Well, the dollar is very weak versus the yen. That's another thing that doesn't help the carry trade, which helps liquidity. So the yen is very strong. The dollar is down 1% versus the yen. The euro is up 2/3% versus the dollar. The pound is pretty much unchanged. And it's interesting because the industrial commodities, they are continuing to drop quite sharply, while silver is up right now 1%.
Silver's recent bounce from a technical low has reignited interest in its role as both a volatile asset and a long-term store of value. Despite breaking key trend lines and weathering sharp corrections, its resilience near crucial support levels hints at renewed strength ahead. With the gold-to-silver ratio at historically elevated levels and volatility on the rise, silver's asymmetric potential becomes increasingly complex to ignore, especially for those seeking amplified returns during metal rallies. Could silver's high volatility and current undervaluation set the foundation for a breakout move, or will lingering macro uncertainty keep it range-bound for longer? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.